Hello, everyone. This is Yasmin Henna. I'm the co-founder and chief commercial officer at Simple. Simple is the first buy now, pay later company in Egypt. Before that, I was leading the business team at Value, the first fintech buy now consumer finance in Egypt. And before that, I used to work in telecom in Vodafone for 5 years. So I've been working, have an experience of 11 years, and thank you for being here.
Hey, hi everyone. My name is Jayant. I work for Mashrek Bank. In Mashrek Bank, we have a product called Mashrek Neo. I'm not sure how many of you are aware of this. It's one of the first digital-only bank in this region. And I'm responsible for revenue, product development, and customer engagement at Mashrek Neo. I have been with Mashrek for the last 4 years, and we have been using MoEngage platform almost for the last 3 years, and quite successful at that. So happy to be part of this panel here. I'm looking forward to have a nice discussion with all of you. Thank you.
Hi, everyone. I'm Haris. I'm working as a VP of growth for a local cryptocurrency exchange called Rain. And before that, I was working for Kareem, which is a ride-hail company. It's primarily a super app now with the food, ride-hail, and a couple of other things. Prior to that, I was part of an e-commerce, noon.com. And before that, like 7-8 years back, I was part of Rocket Internet for their Asian and African ventures. Thank you.
Awesome. Now that everyone knows that who would be speaking, what they would be speaking about, I'll just hit you with the first question, wherein in a digital-first fintech world, right, wherein you may not be the primary banking service provider for the customer. So in that context, the initial stickiness or building that relation of habits right inside the customer becomes very necessary. And keeping that thing in mind, how do you put or how do you rate the onboarding experience of the user, or the day one experience to day 30, or day 1 versus day 30 experience of the user?
I start?
Yeah, absolutely.
Okay, to start with, day one for me, for the user, I believe it's the very, very first impression that the user makes about your app or your platform. So speaking about my first job, we were a very popular telecom. So anyway, people used the service. However, when we started doing an app and having actual interaction with the user, real funnels, segmenting the users through CVM activities, we started seeing actually a huge growth in certain segments where we wanted to increase revenue. So when we wanted to push mass segments to become high, mid, and high value customers, we started seeing the right offering and the right interaction from day one, making a big impact. Moving on forward to my second job, where we launched an app for the first time in Egypt. This was the first time a digital onboarding of a financial service to a customer happened in Egypt ever, was through Value. So what we did was actually onboarding the customer end-to-end, replicating the credit card process, but having it all on a digital app and interacting with the user on the app, making the onboarding process easy, making the first transaction easy, the actual communication with the segment relevant to what he likes or she likes, actually made the funnel grow day by day. So even when the base grew, we started segmenting the people more, and through a platform, growth platform like MoEngage, we started seeing a lot of impact when we segmented the users into based on behavior, based on preferences, based on geographies. This all impacted the experience. So from day 1 to day 30, I believe day 1 is the most important day. It's the first interaction that you do with the consumer. And if this interaction, if you build the right impression, every single interaction that you will do will make the user not churn. So he will not, and you will find him interacting with you without you having to push him every single day to go through your funnel. So, thank you.
Yeah, so maybe I can just share some of the experience that I have. So I think day 1 to day 30, I think that probably varies a lot from business to business. So for example, in a cryptocurrency trading platform, the day one is basically, that person is basically just start to interact with that person, your business. And over a period of that time, you probably have to make sure to engage with that customer to build some certain level of trust, some certain level of reliability, because that person is about to invest his money into your platform. Unlike any consumer-based platforms like e-commerce or ride-hail, where people were just coming primarily for the transaction, but in the investments, they are basically trying to learn, try to understand, and once they have certain level of comfort, only then they start to invest. So the key here for us as a crypto trading platform, the first 30 days is basically, besides having the bright experience and everything, the smooth product, is basically educate a customer on what are the best things to do, how you can actually use that platform, and how you can actually work into the crypto ecosystem, and just keep them informed with the industry update and insights, so they actually got some power within themselves to make the right decision of the investments.
Those are really great insights. Jen, do you want to add something on that?
No, absolutely. I fully agree with what both of my colleagues said here. The first 30 days, I mean, in banks, maybe 30 days is a little too early. What we measure is the first 90 days. The first 90 days is definitely make or break. And especially, I mean, even though we have a bank account opening journey, which is quite seamless, it only takes 2-3 minutes. It is a big decision for the customer to open a bank account. So even though the journey is smooth, the customer must have done some amount of research before committing to open a bank account and parking some funds with us. So it's important that we keep up with the trust and make sure that the first 90 days are as engaging as possible. So we try to make sure that customers do their first activities with us, like park at least like 100 dirhams with us, or fund their first amount. So that's what we always target. But we know that the moment customer makes a commitment of at least 1,000 dirhams in the bank account and starts using our services, then definitely we have that customer for at least the next 5 to 7 years. Because normally customers don't change bank accounts. So that's what we've seen. If you are a transacting customer in the first 90 days, on an average, we see that customer sticking on to us for the next 7 years. So we definitely we put a lot of emphasis to make sure that customers are engaged and transact in the first 90 days.
That's actually a very, very great point, Jayant, which gives me a really beautiful segue into my next question, wherein in a typical banking system, an end user would not be looking at changing their apps or changing their primary banking account on a regular basis, right? So as you mentioned that if in the first 90 days, if the consumer is actually making transaction of, let's say, 1,000 AED, then apart from that, are there any other metrics or factors that you look for retention specifically?
Yeah, so especially in the bank account world, if you see, you can have as many bank accounts as possible. There is nothing stopping you, but you can have only one bank account where your salary comes in. So the moment you decide to switch your salary to that account, that's like, it means that you value this account and value the service of this bank, and make this as your primary bank account. So again, what we have seen is that customers who transfer salary to Mashreq Neo and keep that as the primary account, they are the most profitable customers for the bank, and as well as the most happy customers of our service, because we provide the best possible experience to them and try to keep them as much engaged and happy as possible. So to come back to that question, yes, the first 90 days, we see a lot of customers taking a decision to transfer salary in like month 2 or month 3, because month 1 definitely nobody takes that decision. They play around with the system, they play around with the app, see if their ATMs are accessible, see if they can deposit cash, etc. If they're comfortable, then definitely we see month 2, month 3, they start transferring salary to us, and that's when it becomes a long-term relationship. So, and again, we also know that customers take the time, and we don't also bombard customers as soon as on day 1, day 2, say transfer salary, earn cash back. We don't do that. We try to give the customer the time and the free space to experience our services for the first 30 days. And then slowly we start making them do baby steps, like first deposit 1,000 dirhams, then maybe try using our ATMs. And then finally when we start talking about transferring salaries, etc. It's like a gradual step-by-step process.
And Haris, Yasmin, do you guys also relate with the same, wherein you emphasize more on retention over the period of, let's say, 30 or 90 days, or do you guys have a stagnant retention strategy?
Okay, so definitely it's not stagnant because in Egypt, in specific because I work in Egypt, the market is very competitive and dynamic. So each consumer segment needs a specific way of retention. So whether you're gonna retain with a value given to the customer, whether it's points, it's an offer or whatever, or whether you're going to retain the customer through giving him additional value-added services that are embedded, like an experience that you give to the user. Both ways, it's a very competitive market. So we adjust the retention strategy and how we approach the customers with like you can say that the retention strategy can change every quarter. And this is not because it's that dynamic, it's because it's that competitive. So in Egypt, it's very, very competitive. And as I've been studying other markets, like Saudi, for example, in the financial services market, it has become very competitive that every day you find different strategies of retention and of acquisition. So I think with banks, it's much slower in terms of changing the strategy of retention. But with the fintechs, I see it as very, very fast. And if you don't act fast, you lose the customer on the spot because he'll go to the other option. Because as I've mentioned, there are a lot of different options for the customer at stake.
Yeah, absolutely. I think I would completely agree, especially on the fintechs. And to be more specific on the crypto ecosystem, a lot is basically based on the market dynamics. So there's a bull run and there's a bear market. So bull run means when the prices are like just skyrocketing, and bear when the market is kind of like just going down, which are basically these days if you follow crypto. So the retention strategy within these two are actually way different. So whenever there's a bull run, your conversion funnel will be great. A lot of people are jumping into the trading. But when it's a bear market, then people are a bit hesitant in investing because the prices are generally dipping. But then this industry has evolved so much that prior to joining this organization, Rain, I was just doing spot trading, which is basically simply buying and selling. And that is basically pretty much impacted if it's a bull market or a bear market. Now, there's few other products like staking, for example. You just stake your money for about 12 months, 6 months, irrespective of the market dynamics, you will just get some fixed percentage increment. Like people tend to make like 15 to 20% yearly if they just take that amount. So that's a kind of a product for bear market versus in bull market, spot trading is basically something which is very active.
That's really insightful, Harris. And since you mentioned about the entire bull and bear market, wherein I, for some reason, happen to be the buyer in the bull market and then seller at the bear market, always losing money. So, but since you've mentioned that about the crypto world, right? And with the great influx that we have seen in the last year or two, wherein the amount of traders have actually increased, right? So, what exactly is your metric and the strategy that you follow for not only growth but also for retention, because the entire crypto world has like immense competition itself as well, right?
Absolutely. So I think if you even see the existing numbers, some of the research reports that some of the global players actually still holds a considerable share in this market, and now they are basically planning to actually build their own setup and having to start to take this region seriously, especially MENA region. But I think we have two very good examples from this region. One is basically Noon.com, which is an e-commerce player, which was basically head-to-head with like Amazon, and they just managed to grow. And the other good example is Kareem, actually, which was head-to-head with another big global player like Uber, and they guys just managed to grow. So I think the key in these two examples that you see is basically being just very local, very homegrown. Just try to understand this region much better than the global players. And I think that can actually be the key for local crypto exchanges, other than Rain as well, versus the global players. So that can be like, a region-specific, homegrown, understanding this region, being local, can be one big strength that you see versus other players that we have globally operating here. But with this said, there are a couple of other things that I can share as an example that, this region, especially MENA, is like in the very early in an OY stage when it comes to cryptocurrencies. And this region needs a lot of education. So if you just see the search volumes of, cryptocurrency, like people are looking for like, what is cryptocurrency, how to buy, how to sell, there are roughly around like 14 million searches happening every month in MENA region, Arabic and English language. So that's another pillar that we are using basically just to educate the customer, because that's exactly what they're looking for at this point in time. So the way that we are seeing from the growth perspective, primarily acquisition, is at the very top funnel, just to educate this region, just to educate the customer. And when it comes to acquiring, there are like different growth hacks, different growth loops that you can use, like referral, acquisition, planning, and all these kind of things. And specifically on the retention, it's a big topic in itself as well. So for example, 12-month retention that we see is roughly 10%. And when I say retention, it's a broad definition. So retention can be seen as a person coming to your platform only, or retention can be seen as someone coming and actually doing a trade. But you'll be surprised to know that about the customer that we acquired 12 months back, like 70–80% of them are regularly coming to the platform just to check the price of the cryptocurrencies, just to see how the market moving, just to see the news. But over the time, it's basically the market dynamics as well, which actually defines that when a customer will be really investing versus the customer will be holding on. So you cannot really pressurize, or you cannot really enforce anyone to actually just get into a trade or just to buy or sell. For us, I think that's the key that we are following, just to serve the customers by educating them, and the market will also shape its form to actually really bring up higher retention and higher acquisition in this industry. Yeah.
That's actually a great point, wherein we should not really push the customer so that we tip over the line wherein it seems like spamming the customer. And with that, I would really like to, Yasmin, you really touched on it a little, but I would like to elaborate on a little more on that in terms of what exactly are you leveraging in terms of your app or other marketing channels to reach to your customer and educate them about what are the different product offerings that you have, what are the different products that you have, so that you can not only upsell the customer, but also cross-sell the customer in your same org.
Sure. So it's all about now, as my colleague just mentioned, it's all about the journey of the customer from the top of the funnel till the end. So the customer, what we learned through the past years, it's all about how you use your growth hacking tools and the performance to deliver. So through performance marketing, not only through growth tools, you can reach the customer. So whenever we start, the customer enters on our platform, for example, what we do is that we start profiling this user. We start putting him in the right funnel that he should go through, and then we start doing automated actions based on whether this customer took the action or not. We start moving him to the next stage, and so on and so forth. While doing this, we identify this user. We start using performance marketing on different digital channels like Google Display Network, like Facebook, like a lot of advertising tools and mobile advertising tools. Not only this, we start seeing which group does this customer belong to in terms of responsiveness to the communication. So if this user is the type of the user that responds to notifications, we start pushing him towards this type or this medium of communication. If this user responds more to the performance and Facebook ads and maybe the digital media, we start introducing those mediums to the user. Not only this, we start seeing which users get turned off from some mediums. So we see a lot of users, they turn off the notifications because they get disturbed by the content. Maybe it's irrelevant. Relevance is also very important. When you group the user in the right funnel, you display to him across all channels the right content that he needs to see. So this is on selling. On cross-selling, we start on our platform, after grouping the segments, we start seeing, because we're a buy now, pay later service, so our core model depends on what you buy or what you purchase. So we see what you use, like, for example, you did a gym subscription, so we start showing you sportswear across all the platforms. So we start analyzing what you as a user are interested in, and we start using all the channels, whether email, and we do this through MoEngage, whether email, WhatsApp for business, SMS, digital advertising, everything. So having the 360 view on the customer and knowing exactly which cluster he or she belongs to is the right approach to use and to choose the right medium.
Jayant?
Yeah, sure. So, great point mentioned by Yasmin here. So, in the sense that we try to leverage all types of channels to communicate with customer, and also we also use a lot of cohorts and filters, which pretty much everybody does today in banking world. But one key difference which we probably try to use is the point that Harris said. Like educating customers is a great opportunity to engage with them. Especially if you see the UAE market, a lot of customers are new to the UAE. And generally, they don't know how banks operate in these markets. So even though banking is like a beaten to death product, if you see wherever you go across the globe, if you are entering a new country, you always think there is something different here, something changed. So whenever we talk to customers who we know are new to UAE, we try to use that hook and educate them about what's different in the UAE market, what's this Sharia compliant product, what's Islamic product. So we take that opportunity to talk to them and engage with them, which is a great, which definitely shows our results as well. Whenever we try to use that line of communication, they definitely give much better results. And second point, which Yasmin also pointed out, is that as a bank, we have like several products to talk about. Unlike a fintech where there is just one single product. As a bank, I'm sure you must have experienced this in your personal life as well. There is a separate team that talks about selling credit cards to you. There is a separate team that talks about selling loans to you. So it's always a competition within the bank saying that who will send the first communication, who will get the better response rate, etc. So what we try to do at least, is rather than do a product-based advertising, we first segment the customers based on their level of engagement. The first 90 days, we make sure that only one single team sends communication to those customers for the first 90 days. And then we also have something called as an engagement score. And customers whose engagement score a little less, like they're not engaging with us that frequently, they're not maintaining balances, etc. There is a separate team that tries to, send communication to them. We make sure that nobody else tries to communicate with them, but we just talk about one single thing to that specific cohort and make sure they start engaging more with us. And customers who are highly engaged, like they're already doing enough with us, we try to cross-sell the other products only to those set of customers. That way we try to, not spam customers too much, because at the end of the day, email read rates are less than 5%. As more and more fintechs come in, the relevance of push notifications is also dropping. You get tons of notifications on your app, and there is a need to channelize our communication, which is what we try to do. And we again use the education as a great hook and the other segmentation techniques that both my colleagues mentioned here.
That was actually very interesting first point that you mentioned there, Jayant, wherein the banking rules or even the rules or regulations change with every region that you operate in, right? And with the new regulations coming in, right, what would be some of the limitations or challenges that you have faced, and how do you plan to navigate through those hindrances in user engagement and user acquisition or growing your user base? And maybe Harris, you want to start with that because yours would be the most controversial or most regulation.
Yeah, and I agree. I think we will probably be the one who are actually craving for those regulations, because for this business to run, the most important thing that this company should have is basically a bank account, because there's millions and billions of dollars which are basically just going from the huge base of the customers. So with this said, you cannot get a bank account unless and until you are in a regulated exchange. No bank will actually give you a bank account. And Rain is basically regulated by the Central Bank of Bahrain. We're talking to a few other countries as well. So this is something that we are basically pushing. So just to give you another quick note on the regulation. So 3 years back, the co-founders of Rain were actually working very closely with Central Bank of Bahrain just to help them with these regulatory legislations that is pretty much active. We are already working very closely with Pakistan. That's the next market that we are looking. We are also talking to the Capital Market Authority in Saudi. So we are the one who are basically just trying to help them understand, because generally with the regulators, their understanding and knowledge of crypto is very limited. And it's something that we have to help them understand and convince them, this is something that we should regulate, because it comes up with a huge upside as well. Because if you just regulate it, only the governments can actually have more control and transparency. Otherwise, a lot of things are basically happening in the crypto ecosystem and the governments will not be aware. So we are basically the advocate of these regulations.
Yeah, I think on the regulation side, our experience is like, I mean, I have worked across several geographies, and I feel that the regulator in this country is really, really progressive, especially on the banking side. In Mashrek Neo, we were able to collaborate with our regulators so that you can open a bank account with just your, Emirates ID and a selfie, without, you having to give any other documentation or, biometrics or anything of that sort. So we have been able to partner with the regulator because they are very open to new ideas and partnership with fintechs. And which is something that I'm seeing, as a very progressive step in this country. But again, regulators, banking is a regulated industry, and so are fintechs and the allied industries as well. And it is important that we navigate these regulations from time to time. But I would rather say we are in a much better place compared to several other countries with a progressive regulator here.
And Egypt is one of them. So when we first launched the consumer finance company in Egypt, there was no regulation for such an activity. The law was 25 years old and it was outdated. So we had to do a workaround in order to launch, a legal workaround. And after we launched, 2 years down the road, the regulation came up and we were part of it. So we launched with the regulator, the Financial Regulatory Authority in Egypt, the consumer finance law. And then now with my fellow co-founders, we're launching Buy Now, Pay Later, which is not regulated in Egypt. So we're doing the same and we're speaking to the regulator. Now there is the fintech law that's coming up. So the regulator in Egypt is starting to understand that there are a lot of fintechs coming up. So they're starting to be more responsive. And this has completely changed since the COVID has hit us. So they are now very, very understanding that fintech is the future and that we need to have a regulation framework for fintechs. Thank you.
Indeed, like that's the case with most of the countries. And before we wrap things up and open the floor for questions from the audience, I just have one final question, which may be a little bit controversial, wherein from a traditional bank to a buy now, pay later to an entire crypto world, do you guys see each other as partners or competition?
Of course, I think when it comes to at least crypto, banks are the very needed partners that the crypto exchanges need. And yeah, and I think when it comes to partnerships, they're like a massive opportunity that you see. At least in UAE, we know that Imar Properties or Dimag Properties, they started to accept crypto to sell the property. So that's an aspect of payment. Using crypto as a currency is also happening now. So yeah, I think payments, banking, I think they are basically a part of one cohort, I would say.
Partners.
Yeah, absolutely. Partners as well.
Partners. Actually, for us, we're working with a bank in Egypt on a partnership between us, and because we work on debit cards, so we work with the bank to increase activation and activity rate on their cards. So we're a solution for banks. With crypto in Egypt is still very, I can't say primitive, but it's still very on low key. So I can't say we found synergies yet. But with banks, we see ourselves as partners to banks. And banks, at the beginning, they saw consumer finance as a competition. So they started launching consumer finance companies. But now they see them as actually partners. So that's great.
Yeah. Absolutely agree with both of them. Banks have had several successful partnership with fintechs. For example, Mashrek recently partnered with Cashew, which is another buy now pay later platform for instant post transaction. So I mean, that's just one example. We have several successful examples where we have partnered with fintechs and collaborated and let both the businesses grow. I mean, not just one size not one winner takes all. So naturally, there is a area of collaboration, and banking is a regulated industry. That's the only catch. So whenever there is any collaboration, it is important that we comply to all the regulations. The cost of compliance is extremely high. So that is one thing that we see when we try to partner with fintechs. Because they always come up with these radical ideas and, like they always want to go really fast. But then banks are generally slow, not because they really want to be slow, but the cost of compliance is so high. So naturally, it takes a little bit of time to get the momentum at the same time and the wavelength at the same time. But once that happens, it's a great partnership.
No, that's absolutely great, because me personally think like it's amazing that there's a great synergy wherein all three of you think that all of them like are in partners and not competition. And the very last point that you mentioned, that it's just a bit of more regulations because there is a lot of at stake for the end customer. So having those regulations is also good. With that, I would like to open the floor if there are any questions from the audience. And I'll go twice. Is there a question? And I'll go thrice. There are no questions. I guess you answered everything pretty nicely. Me personally, it was great talking to you guys. I really enjoyed the conversation. Thanks a lot.
Thank you so much.
Thank you so much. Thanks a lot. Thank you.